Income from Business Part 2. Let me see practice 6. Mr. Dev prepared the following profit loss account, compute taxable income from business. In the credit side, sales, closing stock, and interest on FD was given. In the debit side, opening stock, purchases, wages, donation, household expenses, depreciation, preliminary expenses, core expenses, advertisement to net profit was given. And the three adjustments are given in the problem. Three adjustments. Number one, 25% of the core expense related to personal use. Opening stock and closing stock were overvalued by 10%. We should be aware here. And donation to trust eligible for deduction as 80G. Only these are the informations. Based on this, we have to compute actual income from business. How to compute? Let me start the answer. Computation of taxable income from business of Mr. Dev. First, net profit as per P&L account, 4,06,000. Add disallowed expenses, section 28 to 44D. And leave here 7 or 8 lines gap. 7 or 8 lines gap, please leave here. And less incomes chargeable to other heads of income and other allowed expenses, and leave here 4 lines. Just we have to fill it, that's all. First we have to go to the adjustments. 25% of core expenses related to personal use. So what was the item debited in the P&L account about core expenses? 12,000. In that 12,000, 25% is a personal nature, so disallow it first. Okay. Next is second one. Opening stock and closing stock were overvalued by 10%. Listen here carefully. Let's see the closing stock. Here the actual closing stock entered in the account is 4,40,000. Here both opening and closing stock were overvalued. That means it was not valued 100%, 110%. First we see the closing stock. For 110%, 4,40,000 means what for 100%? 4 lakh. So 40,000 was overvalued. If we reduce 40,000 here, it will affect this total, and also affect the net profit. That means net profit will be reduced. So overvaluation of closing stock will be deductible. Okay. Next, opening stock. Let me see the opening stock. Opening stock, how much was given? 2,20,000. Here, opening stock 2,20,000 was not valued at 100%. The accountant valued 110%. For 110%, 2,20,000 means what for 100%? So the actual opening stock will be 2 lakh, but the accountant entered as 2,20,000. If we modify 2,20,000 to 2 lakh, the net profit will increase. So we have to add overvaluation of opening stock. Okay, only the difference 20,000 only we have to add. Okay. Next, donation to trust is eligible for deduction unless 80G. Donation, any donation, it is a personal items, it will be recorded, added under section under disallowed expenses, 22,000. So all the adjustments we covered. So let me go for the debit side of the profit loss account. Opening stock finished, purchases business nature, wages business nature, donations are added, household expenses, it's a personal nature, we have to add. Next, depreciation. Actually, depreciation was given only in the P&L account, but not in the adjustment. So the amount entered in the P&L is allowed. If any information given both in the account and in the adjustment means the items given in the P&L account, it will be added, and the amount given in the adjustment, that should be deducted. But in this problem, no depreciation given in the adjustment. It was debited only in the profit loss account, so it was allowed. No need to add. Next, to preliminary expenses. Under section 35D, preliminary expenses, 1/5 allowed. That means 20% allowed. Balance 4/5 disallowed under section 35D. Next, core expenses. 25% of core expenses related already we governed. Advertisement, business nature. That's all. all the debit side over. Now the credit side, sales, business nature. Closing stock already we governed. Interest on FD, fixed deposit, that was income from other sources nature, so that should be deducted here. Okay. So balance it, the actual income from business will be 4,29,800. In the same pattern, the listeners can practice exercise 6. Now, we'll go for practice 7. Mr. Sanjay prepared the following profit and loss account. Compute taxable income from business. The items given on the credit side, sales, closing stock, and the race winning. Items given on the debit side, opening stock, purchases, wages, donations to NDF, general expenses, depreciation, acquisition of know-how, technical know-how, section 35AB, 25% allowed, balance 25% disallowed, late fee in GST, advertisement, and the net profit was given as 8,40,000. Adjustments, closing stock were overvalued by 10% and opening stock undervalued by 10%. We should be very aware. In general expenses, it is 12,000 paid to government youth skill development program in the local area. It was fully exempt under section 35CCD. It was allowed, no need to add. Advertisement was paid in cash. How much advertisement expenditure? 16,000, more than 10,000. More than, so that will be disallowed under section 48(3). While studying the question itself, we should remember the income tax provisions of income from business. That means section 28 to 44D. Okay, now let me start the answer. Computation of taxable income from business of Mr. Sanjay. First, net profit as per P&L account. Add disallowed expenses. Leave the 7 or 8 lines gap. Less incomes chargeable to other rates and other allowed expenditure. Leave here maximum 4 or 5 lines. That's all. It's a fixed format for computation of income from business. First, let me see the adjustments. Closing stock were overvalued by 10%. See, what's the opening stock? 3,30,000. So this 3,30,000 was valued for 110%. It should be valued at 100%. So for 110%, 3,30,000 means for 100%, it will be 3 lakh. So the difference is 30,000. If we reduce the 30,000 here, it will affect the total, this total, and also the net profit be reduced. So we have to deduct less overvaluation of closing stock 30,000. Okay. Next. Opening stock undervalued by 10%. How much opening stock? 1,80,000. So this 1,80,000 was valued not at 100%, only at 90%. For 90%, 1,80,000 means what for 100? It will be 2 lakh. When we increasing 1,80,000 to 2 lakh, the expenses will increase, means the profit will be reduced. So we have to deduct it. Undervaluation of opening stock 20,000. Okay. Next point. In general expenses, 12. What is the general expenses? 60,000. In that 60,000, 12,000 contributed to government youth skill development programs. It was business nature allowed. No need to add. Next one, advertisement was paid in cash. How much advertisement? 16,000. So under section 40A3. 40A3, any cash payment which exceeds 10,000, that will be disallowed. Okay, added. So all the adjustments we covered. Now shall we go for the debit side of the profit and loss account one by one? Opening stock, business nature. Purchases, business nature. Wages, business nature. No need to add. Donation to NDF, it's a personal nature. We have to add donations, 20,000. Next. General expenses, business nature. Depreciation, business nature. Acquisition of know-how, section 35AB. 1/4 allowed, balance 3/4 disallowed, 3/4 of the full amount. Next, late fee in GST. GST is business nature, but any penalty, interest or late fee, that is disallowed. Late fee in GST 12,000. Next, advertisement, business nature. So all the debit side over. Now shall we go for the credit side? By sales, 18,40,000, business nature. By closing stock, business nature. Race winnings, that was taxable income from other sources, not related with the business. So that should be deducted, race winnings. So the balance 8,48,000 will be the taxable income from business. In the same pattern, the listeners can practice exercise 7 for the smooth understanding of income from business. Now, practice 8. Mr. David prepared the following profit loss account, compute taxable income from business. By sales, by gift from relatives. In the debit side, to salary and wages, rent and taxes, household expenses, income tax, advertisement, general expenses, gift to employees, fire insurance premium, LIC premium, provision for bad debts, audit fee, outstanding GST, and to net profit 7,80,000 was given. What are the adjustments? Only 2 adjustments are there. Advertisement was paid in cash. What is the amount of advertisement debited in the P&L account? 8,000. Listen here carefully. Less than 10,000. If the total amount, when any expenditure paid in the mode of cash, that amount exceeds the 10,000 means that will be disallowed under section 48(3). Here only 8,000, less than 10,000, so no need to add. I shown you as an interest. I shown you as a note. Advertisement was paid in cash with 8,000 only. If it exceeds 10,000, 100% disallowed under section 48(3). So the first point we covered. Next, outstanding GST was paid on June 30th, 6,000. On August 31st, 9,000. Being the due date of filing of return is July 31. What is the total outstanding GST shown in the P&L account? 15,000. In that 15,000, 6,000 was paid before the due date of filing. That was July. That means 6,000 paid on June 30th. It is business structure allowed. But on August, that means after the July only, the balance 9,000 paid. Any tax or due to the government, any tax due paid after the due date of return of filing will be disallowed under section 43B. So outstanding GST after the due date, so 43B, 9,000 only disallowed. So we covered the 2 adjustments. Let me go for the debit side of the P&L account. Salary and wages, business nature, allowed. Rent and taxes allowed. Household expenses disallowed, 24,000 we have to add. Income tax also personal nature we have to add. Next, advertisement, business nature. General expense, business nature. Gift to employees, business nature. Fire insurance premium, business nature. LIC premium, it's a personal nature. 21,000 we have to add. Next, provision for bad debts. Provision. Any word given in the problems of debit side, provision means that will be disallowed under section 40A7. Disallowed. Next, audit fee, business nature. Outstanding GST already we covered. So all the debit side we covered. Shall we go for the credit side? By sales, business nature. By gift from relatives, it is non-business income. That should be deducted from the incomes. So 7,80,000 plus 71, 851 minus 6,070. Balance 8,44,250 is the actual business income. In the same pattern, the listeners can practice exercise 8. Now practice 9. Find the taxable income from business of Mr. Suresh from the following details. Actually, in the problem, it was not given in the income and expenditure account. It was given as a statement. Net profit as per account after charging the following expenses, 6,20,000. Here the expenses are given: income tax paid, income tax appeal, GST paid, provision for GST, late fee and penalty levied on the GST, donation to political party, donation to rural development fund, contribution to staff welfare fund, staff welfare expenses, everything was given. And 2 incomes, income included in the net profit, income tax refund and bad debts recovered are given here. So how to compute? First we have to take the net profit as a P&L account, 6,20,000, and add disallowed expenses, leave 7 or 8 line gaps. Less incomes chargeable to other rates and other allowed expenses, leave gap 3 or 4 lines. It is a standard format. Now we go for the problem. In this problem, no adjustments. So straight away we can go for the debit side. Income tax, personal nature, we have to add. Income tax appeal, it's a business nature. Books of accounts are held as seized by income tax department, that is appeal expenses. It's a business nature allowed, no need to add. Next, GST paid is a business nature allowed. Provisions for GST, it is provision under section 48(7). Any provision shown in the P&L that will be disallowed. 15,000. Late fee and penalty levied under GST, it was disallowed under income tax. Next one, donation to political party. Any contributions that should be made from their personal fund but not from the business fund. It is a business net. It is disallowed nature. Donations to political party. 20,000. Next, contribution to staff welfare fund. If contribution to staff means allowed, but staff welfare fund, it means for future. So that amount will be disallowed. Contribution to staff welfare fund under section 48(9). Staff welfare expenses, it is incurred during the previous year, so it is allowed. Now the debit side over, now credit side. Income tax refund, it is non-business income that should be deducted. Bad debts recovered, earlier allowed. Allowed means it was considered as a bad debts. Now it was recovered. So it is business income only. So need not deduct it here. So 6,20,000 add 1,02,000 minus 6,000 balance. 7,16,000 is actual income from business. Income tax appeal related with the audit function. So it is allowed. Contribution to rural development fund allowed under section 35CC allowed. Okay. In the same pattern, the listeners can practice exercise 9 for their easy understandings of income from business. In the next video, we'll see income from profession. Okay, bye.